Hey, this is Matt from InvestiQuant. Today is Wednesday, May 19, 2021. Yesterday, we saw the markets consolidate the majority of the session, and then going into the close, they sold off heavily and closed right near the lows of the session. So it kind of created a unique pattern where you've got this consolidation-like pattern taking place the majority of the day, followed by a sell-off into the close. And that's something that we can mimic and discover using a market profile filter as well as a price action filter. So let me show you how to do that here, and we will take a look at what has happened historically on a study we're about to run where the point of control, which is a market profile term, is in the top half of the intraday range, but the close is in the bottom 25% of the intraday range. And the point of control is marking where is the most traded at price for the session. So on a consolidation day like yesterday, that price happened to be in the upper portion of the range, the upper half of the range, but the close was down near the low. So let me go ahead and set it up here. We'll use all four instruments. Setup is based upon entering the market long at the open of regular trading hours, which is 9:30 a.m. Eastern Time. The exit is set to 4:15 p.m. Eastern Time. Now, the overnight session has continued its sell-off, and it is trading below yesterday's low. So I just added that as our opening filter. We'll be using that this morning. And then we will go into the price patterns, and we will say that yesterday closed in the bottom 25% of the daily range. I'm going to grab that here from where was the location of the last open and close. The last close was in the bottom 25% of the intraday range. So that adds the week close filter that we were going to be looking at. Next, I'm going to go into the market profile patterns, and I'm going to say that the point of control was in the top half of the intraday range. That's from the POC placement category within the market profile patterns library. And I can hit equals next to POC finished in the top 25% of the intraday range. Next, I'm going to put us in a similar market condition. This pattern is interesting because it does change depending on the market condition. It's definitely different in very bullish markets versus more bearish markets. So yesterday we closed below a 10 but above a 200-day simple moving average. So we're kind of in a weak bullish market environment here. And now I can hit view results. And here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern Time, exiting at the close of regular trading hours, which is 4:15 p.m. Eastern Time, when you open below the prior day low and the prior day closed in the bottom 25% of its intraday range. However, the point of control was in the top half of its intraday range. This has taken place below a 10-day simple moving average, but above a 200-day simple moving average. Historically, the S&P has 44 samples, the NASDAQ has 45, the Dow 43, and the Russell 48, and that's dating back to 2003. If we look at the win rates on them, they are all a little under 50%. The S&P coming in at 48% of these have closed above the open, the NASDAQ 40%, the Dow 49%, and the Russell 46%. So just under 50% there on the win rates. The average loss for the S&P and for the Dow has been larger than the average win, whereas the NASDAQ and the Russell have had larger average wins. So we're mixed there on the average moves up versus down on what has been larger. However, the win rates have all been a touch weak in this scenario. And as I said earlier, what's interesting about this pattern is you put this over a 10 and 200-day simple moving average, a more bullish environment, and it starts becoming more favorable, quite a bit more favorable, actually. So it was an interesting pattern to study. It's not quite as strong in this environment. Looks like it's just been a touch weak historically. So hopefully you found that helpful. Good luck today, and we'll see you next time.